Welcome to the last episode of the entry-level trading course by Valetax. My name is Brian Ifiri and I'm your educator for this course. And this is episode 12. In this episode, we're going to be talking about trade execution and the common beginner mistakes to round up this course. It's important that we understand why trade execution is important and why beginners make these mistakes that they make, because they are very common. And in order for us to let you and set you free into the financial world, to start to explore trading opportunities, it's important that you know this. So stay tuned. Execution is everything when it comes to trading. What separates you from just analyzing the charts and actually trading and making profits or being profitable is execution. Strategy would only work if it's executed properly. So it means that your strategy needs to have a step-by-step process that would allow you to execute properly. Small mistakes can compound the same way small improvements can compound. So it's important to watch how you're executing. If you keep executing wrongly and you do not do anything about it, it would compound and become your identity, and it gets harder to even identify and work on. Discipline separates traders. That is what really separates traders. A disciplined trader could come back from losses, but an undisciplined trader would suffer a lot. And indiscipline would cost you a whole lot more than discipline. It's why it's important to build yourself, manage your emotions, and stay with the trading plan that was explained to you in episode 11. Common mistakes and execution errors that beginners trade. They are either entering too early, they're entering too late, or they are ignoring confirmation. It's important that you have a written set of instructions, or you've been given, or you've seen, or you've learned from a strategy and stay with it. Because like I said, strategy isn't the issue. It's how it's being executed. So if you fail to comply with the rules of that strategy, it's never going to be executed properly on your own side. So instead of entering too early or entering too late, it's most times because of fear of missing out or fear of losing. So you also want to manage and merge your confirmations to your entries. So have an entry requirement. If prices breaks a support and a resistance and we test it and I see a good candlestick confirmation pattern, I would enter into this trade. That helps you avoid this common execution errors. Now, one common mistake again that beginners traders do is moving their stop losses emotionally, not just moving their stop losses, because they do not have a critical defining reason for moving their stop loss. So they just move it emotionally just because they see that prices are returning back to the stop loss and they are too scared of losing. They end up moving their stop loss, and that is what results to a small loss turning into a big loss and breaks the trust in your system. So you do not want that to happen. So instead of moving your stop loss emotionally, hold your stop loss. If prices hit your stop loss, it's fine and good. You've lost on that trade and you move forward onto the next better trade. Revenge trading is a very popular one, not just for beginners, but even for pro traders. They get so emotional sometimes and we end up revenge trading. Why is this? This is because loss is a mental fatigue for a lot of people. Taking a loss affects the human mind emotionally because this is trading capital. This is hard-earned capital. This is probably even profits you've had to take weeks and months on to make, and you eventually take a loss from it, especially when you hit a losing curve or a losing streak. It can get very heavy emotionally for the trader. And when you decide to trade after losing so much, we end up revenge trading. And what revenge trading does is it leads us to increasing our lot size, which is doubling down on our risk because we're trying to get it back. And that mentality ends up ruining our accounts. So psychologically, the market doesn't really owe us anything. We just need to position ourselves in order to be able to benefit from the market. So what really is the necessity for a revenge? It's only because it's in our head and we're just being emotional about it. What is the proper executional mindset? One trade doesn't matter. You don't need one big trade to become profitable overnight. What really matters is series of execution. So here's a task for you as a beginner trader. Journal every trade you take. And out of 50 trades when you've taken them, try to identify what has been consistent every time you took a trade, technically and emotionally on your own side. Long-term thinking is what wins in the financial market, not just short-term every time. So even if you decide to be a short-term trader, it's your ability to see beyond just what your hand can reach right now, and learn to stick to your rules and your structured thinking. And I hope that you've enjoyed this course so far. And I hope this course leads you into further research and further understanding. And I'll see you very soon in the next course for your intermediate journey. But until then, don't stop learning. And we're proud to have you at Valetax.